Good morning, YouTube. Hope you're all good and had a great weekend. This morning I want to quickly share with you a trade breakdown on euro dollar. I didn't keep this trade open as long as I wanted to, but I think it was a good trade and there's something to learn about it because it incorporates many different concepts, incorporates entries, it's about liquidity, structure, and session openings as well. So there's different elements in this trade breakdown that I do think you will find of value and will form part of teaching. And I think this is some great content that you can look at, study, and really grow with. So without further ado, let's get into it. Okay, that's where I should have had an intro. I should work on that, having like a cutscene to a video intro or something like that. We'll work on that. For now, we're just charts and explanations. So I'm just going to quickly give some background on the daily. Let's just ignore some of this price action because it can be quite confusing. So excuse the replay, but that's purely for academic reasons. Okay, let's go to the daily quickly. On the daily, I don't really use the daily as much, but just for this exercise, we're just going to speak a bit about the daily and what we see happening here in the daily, on the daily chart. So basically we have price reacting off of a level to the left. Not really sure what, but we can see price reacted off of this area and we had a push towards the upside. Now that's actually all we needed to know. So if I take now the idea that we had an impulsive move towards the upside, we broke structure, so this can either be a sweep or this could be just a structure break, which wasn't really a structure break because I don't think we had a big body close above this high. But anyway, so I counted maybe just as an impulse towards the upside and then just looking for that retracement. So this was the retracement trade. So on the daily, we see have an impulse. We made it from A to B. Then I'm looking to just trade from B, the retracement up into C. So I'm just trying to capitalize on that portion of the move. So that's basically the main idea of what I wanted to do. So let's drop to the 4 hour now quickly. Okay, here we are on the 4 hour. First of all, we had price really struggling to break below this level. We're going to speak in simple terms, break and retest. So don't worry about strange terms that you not used to. I'm going to really make it simple as possible. We failed to break the support, as easy as that. We didn't break the support. And then we started pushing towards the upside again. We pushed, we made a pullback, pullback, push, and then we had this type of sideways moving market, kind of like a bearish flag. And that's a trick, because often you would see if we have this flag, you would expect price to move on up higher. So that's the first sign that we think this is a false move. So then we can identify the following. Price has now moved up, we potentially created a high, now we're looking for price to go lower. We can also note that we have this high over there, we break out of it and broke immediately back down. So this for me was liquidity sweep. This move was a sweep on liquidity for the buy side liquidity that was resting above that high as well as those highs. So for that reason, I'm now considering short. So we can see price trying to move down, but still failing. But something interesting happened in this area as well. On the 1 hour now, we can identify that we're starting to create liquidity highs. What's those? What are those? Just simple highs like this that hasn't been breached yet. So there's liquidity above these highs. So now I'm looking for price, and I was anticipating that price could potentially break above these highs, grab the liquidity, tap into something on the left, and then we see the push down. Okay, I didn't do the bar replay enough, but you get some insight into what happened. Anyway, so now let's break it down. There we have the New York Open. It's my 2 o'clock. It's over there. So I think the screen cut it, but that is 2 o'clock New York Open. That's where I'm looking for price to make a move. So let's break down this even further. What usually happens at NFP week, we see price really confusing the players. We're taking liquidity on both sides of the playing field. So there we have sell stops, sell side liquidity. We've taken that out. And then we start consolidate. Now I need to ask myself, where's the buy side liquidity? You could at first anticipate this order block to get respected, because obviously we had a push down, we had some structure breaks. You can see there a structure break towards the downside, and we have a complex correction. It's slowly coming up, and then session open. So this could have been a good place to look for shorts, but we always need to ask ourselves, where's the extreme liquidity? Well, meet them. Here's extreme liquidity number 1, extreme liquidity number 2. Very nice clean highs that has not been taken out yet. Then we will see something in this area. So for now, I'm just going to place a line there and there, because something very interesting happened on that side. You can see something interesting happened. Now let's look at the 5-minute time frame. We started pushing up. We did push into this area and we had a reaction, but it wasn't a very strong reaction. Instead, we're waiting. You could have possibly scaled down and used this candle as an order block, but you wouldn't have gotten any confirmation. Eventually, price started pushing up. Now at this point in time, let's just do this. This is now a very interesting point, and we need to pay attention to this. So for this exercise, we're now going to go on the 1 minute, but we're going to look at it like this on the 1 minute, but we're going to look at all the way to the left. Here we are on that area that I noted to the left. I'm going to look at price action. We're just going to break down what's happening in here and where can we possibly expect a reaction. So let's start from the top. So first of all, we had a push up above this high, and then, well, first of all, we had a structure break towards the downside. We broke towards the downside. Then we started pushing back up. We broke above this high. Then we pushed down, and you would expect that this would be the order block, and then we would push up higher, creating a new higher high, and then so on, continue on towards the upside. But that didn't happen. So we failed to make a higher high. So we can then see that price started to shift. We had a shift in the market structure. We saw price now pushing down lower. Instead of respecting this order block and moving up higher, we are now moving, breaking structure towards the downside. We had a structure break over there, and then we moved down and moved down. So we had these 3 structure breaks towards the downside. Okay, but let's not confuse ourselves. Let's say break and retest. So we had the support, we broke it, we came back and retested it. We had support again, we broke it, came back and retested it. Where did we retest every time? Well, for us that follow these type of concepts, we can see that we came and retested previous order blocks, previous zones of mitigation. So that happened. We see price being balanced, and we break, we retest, we break, retest. But finally, what happened? We had a big push down, breaking, but never retesting. So here we have imbalance left. We broke this level, but we never came back for a retest. So there's our support. We didn't come back, so we expect price to eventually come back. Retail thinking, we see this as a retest, which is possibly true. This definitely was a trade in there, but we can know that we look at the origin of the move. Where's the origin? There's the origin. We can even just take this whole zone like this, and let's just move this all the way to the, not that one, I think it's this one. Yes, so let's just make it, no, that way, yes. Move it all the way to the left. So now let's look at price action in that area. Okay, now we're back into that area. I can now take the 50% market tool, and entry was placed at the 50%. So you might ask and say that this is now a very aggressive trade. Well, yes and no. It's aggressive in the sense of how we enter. We don't look for more confirmation, but we've already seen many exterior, I'm calling it exterior, but outside confirmations. And I'll get to that now. First of all, in this area, we had this consolidation, we had greater liquidity above it. And that's one of my entry patterns, is above or below a zone, I want to see price creating liquidity in the form of equal highs. And then I want to see price rally up into that zone that we have on the left and give a quick reaction. And then I would often, then according to my plan, I would take a aggressive, or that's too much entries, I would take an entry off of that zone. 50% off of that zone. That is part of my rules and part of how I enter trades. And that is exactly what I'm seeing happening over here. We're creating equal highs. We then see the run up into that liquidity. Bit of drawdown, well, 0.05 pips, very little. And that's then where I look to enter the trade. Other confirmations will look now on the high time frame, but the target was just this sell side liquidity over there. That is the target. And then obviously we see a reaction, big reaction, and then price started to slow down a bit, and then the bigger drop towards the downside, reaching our targets. So on the 50-minute, why do I take a risk entry there? Because of knowing that we have liquidity, we have a very valid zone where price can react off of. So I'm willing to take that chance because there's so many things in my favor. We're in a downtrend on the high time frame. We have this liquidity. Price is always seeking liquidity. We have this liquidity spots. We have the zone where price can react from. Sorry. The zone where price can react from. Then it's all a matter of reading how price is manipulating, taking liquidity towards the downside, unfinished business here at the top, unfinished liquidity over there. On the 50-minute, after the big run up into liquidity, we can expect price to move down lower. So that was the whole trade idea, and the reason why I then didn't need to wait for 1 minute confirmation, because I had the 15-minute, the 1 hour, the 4 hour confirmations already on my side in my pocket. The brightest and best 1 minute confirmation that I had was this equal highs being created, and then price running up into our zone. That was all I needed to see happening, and that's why I could place a limit, 50% tight stop loss, and then a very tight target towards the downside. Looking then on the 1 hour, obviously this price then reached the lows, which thanks to NFP and just the high time frame direction, price did reach that area, and that would have been a very good very good trade. But happy with what I got there, and it was very good. So I hope it made sense. I hope you guys understood it. I hope you can take something away from it. Yes, please subscribe, like, turn on the notification bell, and then I'll see you in the next one.